Morning traders, Paul here with GammaEdge. Today is Friday, the 3rd of February. Let's get started. Pause your players here, read to the bottom. If you agree, hit that play button. Summary for today, market models are still green. We have what we call a cumulative tick continuation long. Say that 5 times fast. We also have on the long-term scale, the ribbon is in day 12 of an uptrend. This is bullish, and it helps us increase our progressive exposure to the upside. Our gamma scans are showing relatively few setups. You'll see that here shortly. Even though we had a new trigger day yesterday, it is probably worth your effort to be very selective in restricting your entries right now. Again, we remind you to check the earnings report dates, as that can be a big influence on the movement of the underlying. Market breadth, as we view it with our 52-week new high, new low indicator, continues to show a bullish, broad support. We now have completed 22 consecutive days of upside expansion. We haven't seen this since 2021, all of January, and obviously here we are on the 3rd day of February, and it's doing the same thing. The right goalpost is 4,200. Left goalpost has shifted up to 4,000. This is generally constructive. It is effectively, as the complex moves up the strike chain, we expect to see minus GEX come up as the folks who are at 3,800 throw in the towel on those puts, realizing that they're going to have to roll up and be probably out in order to take advantage of any downside movement. So this is a natural occurrence of a bullish market. It's not predictive, but it does show us normal constructive behavior. For the 0 DTE folks, we're watching the 4150 levels, slightly below this for a reversal upward, and we're watching that 4,200 strike and slightly above it for resistance and pullback. We think you can play within those ranges. The 4070 area is what we call the line in the sand. We think sentiment will change quite a bit below that. We are looking to retest these lower levels of where transition is. You'll see that in the upcoming slides. But we would expect the 4070 area to hold, certainly above 4,000. We don't expect anything down there. 4030 would probably be the last jumping place before we got down too far, where sentiment starts to start favoring the bears. Taking a look at the cumulative tick model, you can see on the long-term model what we call the ribbon, parallel lines, uptrend, lower left, upper right. Go to this link here to read more about this. So from a long-term perspective, we are in an uptrend. We've been calling this since the day it occurred. It's a phenomenal model and would urge everyone to learn how to use this thing. 2 days ago, we had a new long trigger day. The day before yesterday, excuse me, we had this railroad track up pattern as a resumption of what we were seeing back over here. It did reset for the 2 days here. And then yesterday was just, the same advance that we're seeing. So we have a CT long continuation. Again, would urge everyone to learn how to read these. These are really, really good signals to take advantage and have progressive exposure. Trigger days are great days to enter. Today is not a trigger day. We're just a continuation. As you have more and more continuations, you get longer in the tooth. So you got to be more and more selective as you get away from those transition zones. So would urge everyone to, again, read down here at Substack, the post we put out there, and would urge you to learn how to use this. From a strategy watch, taking a look at the different gamma scans, J&J is entering this 0 GEX to plus trans entry. Check the ER on that. Plus trans to plus GEX, a couple of ETFs. Not a lot of solutions here to come forward. And then over here, still remaining our XLP and XME. Watch those for also potential reversals, but just know they've been here for 3 days and are continuing to kind of hold that low put-dominated range. So, we're thinking, keep an eye on these things, and certainly the long entries, if you see XLP and XME change their status, you might want to take a small trial balloon position in those. Taking a look at the key levels here. Over here in the SPX PM-Settled Complex, COI dropped. Yesterday's COI, the call open interest for the PM complex, was up at 4,200. It's moved down to 4150. Now this is in the PM complex only. This is not the combo complex. Why this is important: when we see COI come back, we've back tested this quite a bit with our EdgeRater partnership. And the bottom line is that speculators are becoming more realistic. And so we think the COI, although it doesn't have a time component to it, is indicative of a potential weakness and possible short-term top. We're not calling that right now, but we're seeing some of the initial signs of that. We need to have more things happen, but just be aware of that. Over here in the combo complex, plus GEX moved up. It should say minus GEX, I'm sorry, a mistake here. Minus GEX moved up from 3,800 to 4,000. As I just said, that's a natural advance. 4,200 is the upside limit. It's been there now 2 days. We do note the expected move is quite elevated. We think this is in part due to the Apple, Amazon, Google ER release last night and a little bit of volatility that those big three will bring into the market today. Plus, I think we had non-farm this morning also coming in. PM Settled Complex, very constructive. You know, there's not a lot to shoot holes in. I already called out the 4150 drop from a higher level at 4200 in the COI level. Watching these gamma levels, these will be relevant in the overall structure for the PM. That's the tradable structure. Transition right here, 4095 to 4125. 4065 is the JPM end of month short calls, and then down here at 4030 is where we've got this node that's just kind of sticking out like a sore thumb. Very constructive in the money call structure below us, so no sign of the bears. Bulls are definitely dominating this. Up to the upside, the speculators, the out-of-the-money calls are dominated all the way up to 4285, giving us a clear runway, no real discontinuities. Structure's bullish. There's no other way to interpret it. Zero DTE, very tight transition today. You can see up and down the chain. Now, this is the expiry, right? This is coming off. So we have quite a bit of call domination coming off today. The zero DTE folks have got to step up. If you take a large amount of calls off, if you're going to continue your momentum and continue advancing on the bullish side, you need to replace it. So bulls need to step up. Folks need to speculate to the upside. Very clean, very narrow range here, 4150 to the downside, 4175 is the dominant expiry for today. I would watch these two lines, the 4200 and the 4175. You can watch those using the expiry charts within the Discord. Our crystal ball into next week, you can see I've got selected the days of next week. 4200 is coincident with the COI also for next week. And this is, again, the SPX PM-Settled Complex, obviously, because the AM only trades the monthlies. Taking a look here at the range, fairly tight range, 4125, 4140. If we drop below this, we could get trapped, but nevertheless, the structure, and remember, this is an expiry structure, but this is what's going to be in control for next week. This is going to be the conversation. So I want everyone to pay attention to this, right? 4150, the quarter levels, all the way on up to 4250. Are all in contention. You'll see some growth in one of the slides here of the 4300 line, not showing here. It's not in play for next week as far as we're concerned, not yet. To the downside, you know, the 4050 zone, as I said, I think this is a definite area we could test, but I would like to see us stay above this 4125 to 4140 area into next week. And I would not be at all worried if we do pull back into this range. That would be a natural thing. It would be a pause and into the weekend. Not a bad place to start for next week. Taking a look at the combo complex, really clean structure. We haven't seen something this clean in some time. There are a couple cracks in the ice. First of all, the transition structure is really wide and fat. This is not very supportive. That 40-25, 40-30 area remains to be kind of a stick in the mud here, I guess is the way to say it. It's been persistent all week. Ideally, we want to see transition get narrower and come up. We want to see, think of a helium balloon. We want to see transition as the structure moves up. We want to see transition move up. We're not seeing that. What we're seeing is price get separated from transition, and that is an extension. And typically, although I don't want to say we mean revert to transition, we do tend to favor coming back to the tops of these things, especially on pullbacks. And so we would be favoring a 4100, 4105, 4110 pullback range. If we can hold that area very healthy, we would be looking to add to our longs at that point. If we drop down into this 4050, 4065, which is the JPM end of March strike, and then of course this 4030 area, we'd be a little concerned, and you'll see that here on the next slide why that could be. Following that line of thought right here, 4070, you can see a fairly clean transition, and in this area it gets really dicey and the battle will ensue. Are the bulls going to take over, or are the bears going to take over? We did move up a little from this gamma strike. Not sure the genesis of this strike. We've been looking to see when this came in and you know what was the size that put it in place. It's very persistent and it's very dominant. So we're continuing to look for that and see what that transaction was. That being said, 4,000 up from 38. Don't want anybody to think, though, that we couldn't slip right back to 39. If we do slip back to 39, not a big deal. We could see a little bit of weakness. You can see the relative magnitude. So any pullback in price will, increase these, of course, and that could embolden the bears to put some puts down at 39. That's fine. We actually want to see puts go in. We want to see that natural backfilling, some of that speculation here. We also want to see the in-the-money calls. Remember, anything below the current spot price is an in-the-money call. It's not shown here, of course, because this is gamma. But we want to see those folks who are profitable in their calls, close those calls and add them out and up. And in doing so, that will expose and continue to push up the transition, which is a very healthy thing in a bull market. When we start seeing transitions slip down, that's a very good indication that the bears are starting to take control. So with that, I will leave you. If you have any questions, comments, are intrigued, whatever the case, go to GammaEdge.us. In the upper right-hand corner of that web page, you'll see a pricing tab. Click it, fill out the blanks, come on in, all the tools turned on, etc. Twitter, follow us, GammaEdges with an S, of course. Here on YouTube, two things. First of all, if you like today's content, smash that like button. Give me immediate feedback that I'm providing the content that you want to see. And two, subscribe, because Taylor, myself, and Michael are constantly posting videos, and we want you to see what we're seeing and learn perhaps how to apply this thing called gamma and delta and just options in general to your trading. So with that, I bid you farewell. Have a great Friday. Be safe, manage your risk, and enjoy your weekend. Thanks, everyone.